Now on Bloomberg Intelligence, Munis in Focus.
Focus on Munis is brought to you by BAM.
BAM.
Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Be a part of building America. Invest in
BAM.
BAM insured bonds. Man, me and Paul one time did a show down from Build America Mutual, and it was a fantastic experience. Got to meet all the guys that were working there. Got to really immerse ourselves in the muni market, which I love to do. We'll continue that right now with Bloomberg Municipal Bond reporter Max Adler. He joins us on Zoom out of Los Angeles. And Max, before we get to any of the specific stories on your radar right now, I want to ask about the potential to remove the tax advantage of munis. John mentioned it earlier on. How likely is that to happen?
Well, thanks for having me. It's going to be tough to follow up that fabulous ad read. But on the tax exemption, we don't think it's that likely. It's definitely something that's been floated. We have all of these potential tax cuts that the Trump administration is going to try to push through. They're going to try to extend the TCJA. And this has been floated as a possible way to make up some of the tax revenue that would be lost. But we don't think it's that likely. Trump does have a lot of finance people in his corner. Howard Lutnick and Cantor Fitzgerald, they have some muni holdings. I would not think that he'd be advising Trump to get rid of the muni tax exemption. And the federal government hasn't proven that it can make up for the infrastructure demands that municipal bonds take care of. Right now, munis fund about 75% of the infrastructure projects that are built in the U.S. So there definitely would be a problem financing a lot of those infrastructure projects if the tax exemption was done away with.
Yeah, they'd have to turn to the taxable market. I mean, how likely is that?
Yeah, I don't know if that would be particularly likely. We do think that the taxable market would expand a little bit if Trump does get his tax cuts through. That would lessen the value of the muni tax exemption to some extent, especially in bigger tax states. But yeah, no, we don't think it's particularly likely that all of the country's infrastructure needs would be met by the taxable market.
All right, so it's not likely, but this is one of the ways he could make up for lost revenue from the tax cuts. What kind of shape are the municipalities in right now? Because a few years ago they were just swimming in cash and didn't really need to issue too much debt anyway. How do they look currently?
They're showing some signs of strain, especially in bigger cities. We see a lot of different transit agencies right now are having a lot of problems that started before the COVID pandemic and was exacerbated during the pandemic. You're seeing San Francisco is having some signs of budget strain. Chicago has been talked about a lot. They're having a lot of problems funding their public schools and just with revenues in general. So a lot of cities are showing some signs of strain, especially now that some of the federal stimulus that was injected into the cities during COVID is drying up.
All right, let's talk about sports stadiums. Tropicana Field was pretty much destroyed by, Hurricane Milton. But it's munis to the rescue, or is it?
Probably not. It's actually the team that is likely to be covering the cost of this. So as part of their lease agreement with the city of St. Petersburg, they don't pay anything in rent pretty much, but they are on the hook for any maintenance costs and the cost of repairing the stadium right now. And as you said, the roof of Tropicana Field was entirely ripped off during Hurricane Milton. They have about $55 million in damages. The Rays have been contributing to this escrow account essentially over the length of their lease, which has almost been like 27 years at this point. So there is money in that account that they'll then use for the repairs. But it won't be a muni-funded repair project.
Okay, so I saw the story where the Rays, of course, they're moving to Steinbrenner Field. The Yankees are going to let them use their spring training facility, but And the worry was, will everybody fit in there? And given the average fan base, yeah, they're not going to have any problems moving into a much smaller stadium.
By the way, if people have invested in that kind of paper in the past, financing stadiums and the like, how well do those investments typically do?
They typically pay off pretty well. There's like a lot of demand for that paper as well. There are a lot of like affinity buyers that want to come in and buy credits of names that they know pretty well. It happens with universities. It even happens with smaller schools. There was a private school out here in LA, the Curtis School. Their bond sold out really well, and that was mostly like affinity buyers. But stadiums in particular do get a lot of those affinity buyers. It reminds me of a recent deal that the city of Buffalo, actually Erie County, where Buffalo is located, was marketing recently. They were trying to sell Bills bonds, as they were calling them. And that deal also was pretty well subscribed. It didn't draw as much retail demand as they expected, but certainly the institutional investors stepped up.
All right, Max, thanks so much for joining us. Max Adler there, Bloomberg municipal bond reporter out of Los Angeles.